Reports suggest that central banks are back in the business of buying gold. Already the world's largest investors in gold, Gold Hub said that central bank holdings are more than 30,000 tonnes and adding it fast with a 61% uplift between January and February this year over 2018. Why? What does it mean? And perhaps more importantly, which central banks are buying into global gold reserves? Simon Popple joins us now from brookfieldcapital.com, where he initiates a regular gold newsletter. Simon, welcome.
Thank you.
Good to have you back on deck here today. I want to start first of all by talking about which central banks are we talking about here, because it's fairly big in terms of the overall picture.
No, absolutely. Well, I mean, China and Russia and Turkey are probably the standout, even though there does seem to be a movement from west to east. But I mean, if you look at what's happening in China and Russia, I mean, really, the trend is just incredibly obvious that gold central bank reserves are on the increase. I mean, as you can see here from 2000, they really have started to creep up, and it's also the same in Russia. If you look at what's happening in Russia, you've got a similar, well, the trend is definitely the same because of the way they report it. The line is slightly different, but it's very, very clear that central banks are buying more gold.
I'm interested as well in the point about why it's the East. There seems to be this trend going from west to east, or is that something I'm reading too much into?
No, well, I mean, again, if you look at this graph, the red line here shows the percentage of Asian reserves relative to world gold reserves. And as you can see, I mean, there's clearly an upwards trend. So gold does seem to be moving from west to east. And I think perhaps the concern for the gold market is whether or not it's going to come back, because if it doesn't come back, then it's essentially out of circulation, and the world is trading with whatever's left.
Why are central banks doing this? This is another important question as to why, and why specifically them, but what is the motivation behind this?
Well, I mean, in a way that's a million-dollar question, but I mean, I think one reason could be the escalating world debt. I mean, here on this chart we just show the US debt. And as you can see, up until sort of relatively recently, gold seemed to sort of increase pretty much in line with US debt. But since about 2014, the gold has fallen below the US debt line. And it's difficult to see the US debt coming down materially. So I think the implication would be that it's more likely to see the gold price increase towards this debt line rather than vice versa.
So in terms of then where do we go, what metrics should we be looking at to give us an indication as to maybe using past performance as to how we should view where we are now and where we could be in the future? Well,
I mean, history sometimes perhaps doesn't repeat itself, but it sort of rhymes. And this graph here really shows the 1970s bull market relative to the current bull market. And we're definitely in a bull market. I mean, the gold has gone up about 406% so far, which on the one hand sounds like a lot, but then if you look at what happened in the 1970s, it went up over sort of 2,000%. So I think if the gold price was to react to some of these exterior forces, such as central banks buying more gold and increases in debt, then if it was to repeat what happened in the 1970s, as you can see from this chart, it could go up quite dramatically.
How much of this is assuming that the dollar fails, or rather loses its appeal? Because presumably, if the dollar maintains its appeal, we know from past experience that when the dollar rises, the price of gold falls back. So are you assuming here that the global appeal for the dollar wanes?
It's very difficult to know, because I mean, when we had the financial crisis in 2008, there was QE, and the system managed to save itself. And that on the one hand that worked because the system remained intact, but the quantitative tightening doesn't seem to have worked, and we seem back into the sort of world of money printing. And with interest rates being so low, it's difficult to see what would happen if there was another crisis. And it may be that the dollar is absolutely fine, But we just don't know, because if there was huge money printing to alleviate any form of crisis, then the dollar could be under pressure, and if it was under pressure, then I think people may look towards gold.
Of course, there are other forces at work here as well, because you're talking there about quantitative easing, which at the time when they started this, economists were warning about this because it would fuel enormous amounts of inflation. That hasn't happened. Gold is a hedge against large inflation as well, isn't it? Which, of course, because prices remain low, I suspect that's probably one of the reasons why gold is so low. But going back to this point at the top about the fact that central banks are buying gold, if they're buying at the rate we're told they are buying at, and the evidence is only there to be seen because I know that the documentation that we know about is revealed. Why has the price of gold not risen from where it is? We seem to be languishing, around about the 1300 level, have been for some time. Last year, I think gold fell about 2% overall in 2018. Why has the gold price not already started to reflect this extra interest in gold from central banks?
Well, again, that's a slightly unknown quantity. I mean, I think one area that people are perhaps looking at is the availability now of paper gold. And there's talk of it being leveraged to physical around sort of 100 to 1. And it's paper gold which is really traded. And it may be that if the market lost faith in paper gold and wanted physical, then you would see a rapid rise in the gold price. But with so much paper gold being available, then I think there is greater ability to play around with gold, and obviously the price hasn't really sort of moved around.
And of course that relies on people not wanting their gold to hold in their hand. Presumably when that starts to happen, if indeed it does, that's a game changer.
Well, yes, I mean, if that does happen, but it's a huge if. I mean, at the moment, for many years people have been happy trading gold, and that could well continue. Yeah.
Look, Simon, we've got to leave it there, but thanks indeed for joining us. Simon Popple is from brookfieldcapital.com, and you can catch up with more with Simon and his newsletter on brookfieldcapital.com, the website that he runs.